Hello, Maverick traders. This is Rob Reinhold. Here we are, November 29th. We have one day left in November, then the books are closed. Let's jump into today. In this session, we're going to go through the trading day. We're going to take a look at the equity markets, the commodity markets, and then we're going to come to the determination, did anything change as far as scores go? Again, this is not our opinion. These are technical scores. And then as always, we are always looking for trading setups. We're going to take the strongest, pair them up against the weakest, and look for some trading opportunities over the next 24 hours.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
If you watched the video yesterday, I did the video at the end of the day, and I basically said, I don't like this market. I don't think it's a good market. This is where we were. And I said, look, we had a little bit of weakening in the dollar and the Swiss franc. And we had the yen that was at a +2. And I really talked about the only currency I was interested in was a Kiwi dollar trade. But we had the RBNZ last night. And I said, look, I'm not making a trade ahead of the RBNZ meeting. And the Kiwi dollar popped up and then gave everything back. This is not a great trading environment. And as a trader, especially when we are directional traders, when we need moves, and not just moves, but we need moves that aren't going to knock us out and stop us out. So we need moves that are going to just keep going and keep going, keep going. We are not getting that at all in this market. Let's take a look at the news over the past 24 hours. We got the Australia CPI. It was supposed to come out at 5.2%. It came out at 4.9%. The Aussie was the worst currency because of that. It did not have a good day, but it wasn't a terrible day. We also heard from the RBNZ. They stayed at 5.5%, which was expected, but they talked tough on inflation. They came out a little bit more hawkish, which caused the Kiwi to jump up in the first 15 minutes, and then it just faded all the way back to where it started, and it was almost like nothing happened. This morning, we heard from the GDP report. It got even better. It was at 4.9%. They revised it higher to 5.2%. That is a dynamite read on the United States economy. So let's take a look at what actually happened today. Now, if you remember, I said I don't really like trading. And take a look at the returns we got. Dollar flat, pound flat, CAD barely down, euro barely down. There was really only one currency cross, maybe two, that you could even make a little bit of money on today. If you were in Swiss franc against the Aussie, okay, that moved 1.1%. Maybe Aussie Kiwi would be a decent one. Outside of those two crosses, there was no money to be made in the Forex market over the last 24 hours. If we go into equities, take a look at the equity market. Yesterday, we went up 0.10%. Today, we went down 0.10%. That is as close to flat as you could possibly get over a 2-day period. Crypto, down 0.34%. That's nothing. That is absolutely nothing. Gold, okay, oil ran up, big deal. It did not help the Canadian dollar whatsoever. And if we take a look at the moves in crypto, again, these moves are zeros. I mean, Ethereum 1%, that's not really even a move in crypto. That's basically a flat for the day. So the big question is, I didn't like the market yesterday. Did anything change for me today as far as my outlook goes? Let's take a look at the equity markets. Did anything change on this chart? Well, we did have a run-up today, but then we gave it all back. So by the end of the day, we looked like we were going to break out of this high base, but we didn't. But we're not breaking down. There's nothing bearish here on this chart. We're just going sideways still. And today was just more confirmation that it tried to break out and it couldn't, which tells me this market is just tired. There are no signs at all that this market is going to go down. But there's also really no signs at all that this market is going to go up substantially. I think we're going to continue to see this float up. Again, float up where most days we are sideways, and then one day out of the week, we go up 0.5%, and then we end the week up 0.7% higher than the week before. That's what I think we are looking at for equities. So look, I don't think there's a lot of energy coming into the markets. I don't think that there's a lot of energy coming into the Forex market or the crypto space. We need energy to make good trades, and it's just not here. Part of trading is knowing when not to trade. These are the weeks that chew up amateur traders because they're clicking buttons, clicking buttons, clicking buttons. They can't figure out why they aren't making any profits because there's no profits to be had. These are the weeks that you really just need to scale back, sit out, trade half sizes if you just can't resist it because you don't have enough discipline yet. Trade a half a size, trade a quarter size, if that's what it takes. Let's take a look at the news over the next 24 hours here. All right, we do have some manufacturing numbers coming out of China tonight. This will affect the Aussie and the Kiwi a little bit. These numbers have been close to 50 for probably 2 years. I don't think we're going to see much movement from these whatsoever. Unless they are substantially away from the forecast, I think you have nothing to worry about here. Tomorrow, we do have two things to worry about. Canadian GDP, and we get the core PCE price index out of the US. This is the Fed's favorite inflation measure, but look, all the inflation numbers, all the measures in the US have been falling. Even if this one comes out hotter than expected, people are going to say, oh, this is only one report. All the other reports are moving lower. So I actually don't really like the core PCE price index number. I think the better number to trade is going to be the Canadian GDP number. Now look, forecast is for 0. If it comes out at 0, it's a dud. We're going to need to see like 0.2 on the plus side or negative 0.2 on the downside for this to mean anything. Other than that, there's just not a whole lot on the schedule, which tells me to trade less. Let's go ahead and take a look at a few of the currencies that moved. I really just want to take a look at the dollar and the Swiss franc that had the biggest moves this week. But really, as you can tell, I'm not excited about trading this week. So I want to take a look at the dollar basket. So here's the dollar basket, and let me get my velocity score out. I'm going to go to a 4-hour chart. All right, so here is the dollar basket, and the dollar basket has been on a very steady decline. Again, it falls, it rallies. Falls, bases, falls, bases, falls, rally. Okay, so we do have a little bear rally here. The big question is this a great shorting opportunity? On a chart, if you just looked at this chart, this looks like a good shorting opportunity. Every time we've seen a bounce or a base, it's been a good time to get in. You know, here is a breakdown of a base. It was a decent time to get in. Here's another breakdown of a base. Decent time to get in. Another base, good time to get in. We got a rally here. So the big question is the same thing going to happen where it just rallies and then falls to new lows? I don't think the energy is there right now for that kind of movement. So while this does look like a technically decent setup, when I step back and look at all the things that are happening or not happening in the world, I'm not going to take this. You know, like I said, I could make a case for this just on a technical basis, but when I add in all the things around it, it's just there's not enough energy there. I mean, the dollar basket didn't move at all today. It's just the energy isn't there. Let's take a look at Swiss franc. The Swiss franc was weak, and look, it had a big bounce. Okay, so as you can see here, we're just simply back up to this high. Maybe we got some lows of support back here. Maybe a little lower. The Swiss franc to me, look, if someone said, Rob, I want to take a short up here. Okay, if you have to, like if you don't have enough discipline to not make a trade, could you possibly wait for this to hit this resistance and fall back down and take a short? Fine. I would recommend that you don't trade because it's not a great trade. It would be trading because you're bored and you want to be in a trade, not because this is a great trading environment you find yourself in. Let's take a look at Aussie. So Aussie was the currency that weakened the most. And for the most part, we've been bullish Aussie and we've had this big fall. The question is, can you buy this pullback? We have made it down into a support area. The big question is, can you buy this pullback? Technically speaking, I could make a case. Now look, it's not ready yet. I need an upward sloping RSI. I'm going to need this 13 EMA to at least flatten out, if not go higher. I would love to get above the parabolic SAR. So there's a lot of things that have to happen technically. But could I start looking for a bounce on Aussie off these levels? Sure. But is it a great trade? No. It is a trade. So hopefully you can see that my advice is to not be looking actively for a trade, and hopefully next week we get a better market environment. So let's go ahead and update our board here. We had dollar Swiss franc. We're looking a little weak. They've had a little bounce back. Aussie was looking a little strong. It's fallen. Bitcoin down to 0. This is our board. Remember, we like them to be +2 or +3 or -2 or -3. The only thing that looks okay at this point is yen, but we have no -2. We can't do Bitcoin Cash against the yen. So again, the velocity board is also showing the same thing that I'm talking with you about, is that the trade is just not there right now. Traders who try to click the button in these moments, they lose money during these moments. And even though they're really good when the markets are moving, they give back all this money at these moments and they struggle. The best thing you can do is to not trade during these moments. Find something else to do. So when we get to the part where I usually show you possible trades, I am not going to do that because I don't want to show you any trades because I don't think there are any good trades out there for the market. So let's wrap this up. I do expect this risk-on move to continue in equities. Looking through to the end of the year, we are bound to get some end-of-year performance chasing. Decembers are typically up months, especially Decembers before an election year are typically up months. So there are a lot of things that are telling us that this market probably goes up a little bit more. Do I think we've got a 5% run in the market in December? No. November was the best month we've had in the stock market since July of 2022, 15 months. I don't think we're going to follow that up with another gangbuster December. I think that December's up 1 or 2%. And it probably is already up 1% for the month already. So I don't think this market is going a whole lot higher, but what I definitely would say, it's not going lower. It's not a great trading environment because we need lots of things moving to create energy. We're just not getting that. So my advice is trade less and maybe even just take a week off and come back later. That's it for me. Goodbye, everybody.